It's tax return season, and if you did a backdoor Roth IRA, that can mean some tremendous confusion. Let's sort it out on this video. Hi, I'm financial planner Sean Mullaney. Let's discuss. So first things first, right? This is an academic video. I'm not doing your tax return, right? We're here to have an academic discussion, but let's talk about it. In 2022, you did a backdoor Roth IRA, you dotted the I's, you crossed the T's, you think you're good, and now it's tax return reporting season. You're like, what the heck? This is so complicated. Well, let's break it down, right? It doesn't have to be rocket science. Let's start with the Form 1099-R, right? You get this in the mail. You can download this from your financial institution's portal. You get this thing. It's called a 1099-R anytime you do a backdoor Roth IRA. And what is it doing? It's reporting, for the most part, the Roth conversion piece of it, right? So I'm positing an example, maybe January 2022, you do a non-deductible traditional IRA contribution for $6,000. And then maybe in February, you go back into the account, oh, look, it's grown to about $6,003, maybe it earned a little interest. Now let me do my Roth conversion step in February 2022. So when you do that step, guess what they do? They generate this 1099-R in early 2023 to report the Roth conversion. And here's how it looks, right? So notice you have this gross distribution on, what is that? Box 1, 6,003, right? And then it says, oh no, it says taxable amount, 6,003. I didn't think I was going to be taxed. I'm doing a backdoor Roth. Well, calm down. It's going to be okay. But we have to do the machinations, right? And then notice some of these other boxes here, right? Taxable amount not determined. That box is checked. Guess what? You're going to determine the taxable amount by doing the tax return, hopefully correctly, right? And then it does check that it was a total distribution because that's what you do when you do a backdoor Roth. And then we have distribution codes. Box 7 says 2. That's important. That's basically a tax code way or tax law way of saying no 10% early withdrawal penalty, right? When you do a Roth conversion, there's no 10% penalty. So that's important. And then there's this box that's checked that's saying it came from an IRA, SEP or SIMPLE. That's important. So your tax return software, they vary, right? But it should have some portal or input. Did you get any 1099-Rs during the year? Did you have any retirement income during the year? You're going to want to make sure that box 1, box 2A, B, and 2B, and then the 7, and that all that stuff that's on there is put into the software, right? If you don't put it into the software is not going to be able to properly report it. So that's important. Okay. So what do we do with this then to properly report a backdoor Roth? Well, we go to the Form 8606, which is going to do two things for us. One, it's going to report our non-deductible traditional IRA contribution. And two, it's going to report the fact that we did the Roth conversion, right? So it's reporting basically all the backdoor Roths. So box 1 is our non-deductible traditional IRA contributions. That's the $6,000, right? And by the way, if you're married, each spouse does their own 8606. We don't have joint IRAs. We don't have joint Roth IRAs. So you're sort of not married for this particular purpose, okay? All right, so box 1 is our own, we don't worry about our spouse here, our own non-deductible IRA contributions. Great. Now, box 2 is our total basis in traditional IRAs. Now, this exists, but it's pretty rare. You would look at last year's Form 8606 or any previously filed 8606s. Generally speaking, when we do backdoor Roth IRAs every year, we should walk away with zero basis. So that's going to be 99 out of 100 taxpayers, but not all taxpayers here. I shouldn't say 99 out of 100, but most taxpayers, particularly if you're properly doing backdoor Roth. So let's just put zero. But if you do have basis from previous years, that needs to be reported in that box too. And then we just do some math there, which is 6,000. Even I can get that one, right? And now we have this little box. Did we do any distributions from IRAs or did we do a Roth conversion? Guess what we did. So we go to this box 4. I'm assuming you did your contributions to the traditional IRA back in 2020 or 2022. So we hit 0 here. And then this box 6, so important, right? What we have to do is we have to say, all right, on New Year's Eve 2022, right? I've previously written and done a video on that. So New Year's Eve 2022, what were our balances in all our traditional IRAs, SEP IRAs, and simple IRAs. And that's all over the world, right? Every IRA we have anywhere. If we've properly done our backdoor Roth IRA, the answer to this question is 0. But if it's not, we got to go find those balances on December 31st and properly report them, right? If the answer to this isn't 0, we probably shouldn't have done a backdoor Roth, and we'll have to, report it on this tax return and learn our lesson. But hopefully it's 0, right? That's so important. If it's not, you got to go grab those balances, report them, and learn a lesson in terms of the future. Okay, fine. So we hopefully we're at 0, right? If we've done everything right. And then what we do is we go to this box, let's see here, box 8, which is the net amount we converted from traditional SEP and simple IRAs to Roths. Well, that was the 6,003. Okay, so we hit 6003, and then we add up lines 6, 7, and 8, and that should be the 6003. All right, and then what we're going to do is we're going to divide line 5, by the way. I didn't do some addition here. So this line 5 is 6,000 for our non-deductible IRA contribution, right? So what we got to do now is divide line 5 by line 9. So I'm going to pull up my calculator. Hopefully you can see this. 6,000 divided by 6,003. And we're just going to put in this box 10 the 0 and the 9995, right? And then we multiply this, this little line 10 by line 8. And guess what you're going to get? If we do that, so let's go back to our calculator and we multiply 6,003. Guess what you're going to get? You can get $6,000, right? In this box 11 here. That's generally what you should be getting. And then line 7, that's for distributions. We didn't take distributions. We did a conversion. All right. So then in line 13, we add up our box 11, box 12, and then we get 6,000. So that's easy enough. By the way, I omitted a couple steps here. So line 8 goes to this line 16. So we'll come back to this, but that's important to do. So line 8 goes to line 16. Hiding that. There we go. And then is it line 11? The 6,000 goes to line 17. So that's important. Hopefully your tax return software is doing all that for you. Right? But if it's not, you got to make sure that's happening, or at least there's a schedule in the tax return that makes that happen somewhere else, right? So what happens sometimes is they'll say see pub 590-B worksheet or something like that instead of actually filling out the form when you e-file. That's okay. Different tax return softwares do different coding, but at the end of the day, we got to get our 1040 to the right place, and I'll go over that. So, all right. And then let's see here. So we get the 6,000 here. That's the non-taxable piece. And then our taxable piece, let's see here, let's see here. So subtract, on line 14, we'd subtract the 6,000 from the 6, so that's 0. And on 15, we do line 7 and line 12. We didn't take distributions, so that's fine. We don't have any qualified taxable distributions. There's no taxable amount there. And what we do, so that's where we end up here. And then what we do is we just check this part 2, right? Let's see here. Yes. And we've grabbed these numbers from up above. And what that's doing, though, is we subtract the 6,003. That's the total Roth conversion less the basis created in the backdoor Roth, the 6. So our taxable amount should be $3, right? If we've done everything right and we had 0 balances at the end of year end, this part 2 should wind up looking like something like that. Now, I don't know the amount of your particular backdoor Roth conversion amount. Sometimes there's all that little, like, oh, there was some interest income in there. Sometimes we forgot we did step 1 and we come back to step 2 months later and it grew by $100. That's okay, creates a little taxable income. But okay, fine. So then what do? We then go to our Form 1040 And we got to go find these IRA distributions, right? And in box 4A, you got to put the gross amount. That's 6,003. That's the gross amount. And then the taxable amount comes from this schedule we just did, this part 2 on the 8606, and the taxable amount is that line 18, the $3, right? So if we've done our backdoor Roth IRA correctly, we're going to have some result like that, right? Where the taxable amount is the amount that's coming off of our 8606 part 2, and it should be something very small. It could be zero even, depending on what the asset did, right, while it was in the traditional IRA. So there you have it, sort of a very broad overview of how backdoor Roth IRAs, if optimally done during the year 2022, for the year 2022, are then reported on an 8606 and a Form 1040. Hope you enjoyed this video. If you did, please smash that like button and subscribe to my channel. I'll see you next time.